Good evening, everybody. Welcome to today's webinar. For those that don't know me, just joined today. My name is Louis. I focus on options and futures. Currently, I'm sharing a screen on the NASDAQ, but we'll go over some things that we might need to cover shortly. So, it's basically a plain chart. These lines here are the fibs, the Fibonacci arc fibs. Basically, I take basically one of the pivots down at the bottom and then try to retrace it up to the highs, and then these lines are placed automatically on the study. Can y'all hear me? Anybody here tonight? Typing yes on the chat or say yes, we can hear you. Alright, German, appreciate it. Alright, so it's past 8 o'clock. Try to make it an hour webinar. For those that's just starting out, I know we have a lot of guys, a lot of people that are just starting out, so I'm just going to clear my chart of everything that's on here. This is a basic candlestick chart of the NASDAQ futures. This is a 180-day chart, 4-hour time frame. So the way that you start by trading is basically finding support and resistance. You had to find those. You had to basically start that as a foundation to start trading any index, future, or stock. I'm gonna go ahead and place a price line here. Let's see if I can make it bigger. So we can see it better. So I placed a price line there, and I just did that. As you guys see, price was basically this was a resistance. At what point once it broke that, we went to the upside. It also was support there, but it did not hold, so we fell back down. Again, that's acted as resistance there, and we're back at it, at resistance there from last week. This is what happened on Friday. Basically red on Friday. I'm not gonna touch on why we thought it was red. It's just red based on the candles itself. We follow price action as we know it. So going forward, what do I see going forward here? This is like I said, clean chart, no indicators so far. We're just basing our price based on price action and trend lines. So we could take this trend line here and hold there, as you guys see, obviously, we're basing this live, as you guys see again, trend line there, confirm as a key resistance level for the past, I guess month or so, 2 weeks. This is 2 weeks ago, the week before that, and the week before that. So you got, and you could take it as a triple top. No, this one has four. You got one, two, three. You got four. So that price there has gone rejected more than several times um, in the past. So that's something that you guys have to keep an eye on if you guys do trade futures. Like I said, if you're just starting out, we're just starting from the bottom again, trying to get the basic um, roots and foundation on how to get started. We're gonna take basically a trend line from here, and we're gonna use this bottom point here. And again, just using basic trend lines, we could figure it out that once it broke this trend line here, it went to the upside, as you guys see right here. So that is basically trend lines on how to get started. This is how you basically draw them. You take previous high to a resistance level there, and then none of this up here is going to be there yet. If you take this second point, this is your second point, this is your first point. So everything in front of it, you know, we don't know exactly what's going to happen. But what I do know is if it gets above this trend line here, it could get back on the upside. If it breaks this resistance here, it goes back on the upside. Um, so those basically are key levels there um, on this chart as we see it so far. Um, what else we can find? Um, we could take this high here, attach it up to this low. Actually, yeah, we can go this low here. So we did another trend line, um, basically attaching the trend line to the high here and then the low down here on this pivot here. Now this creates a megaphone. Um, if it bounces off this trend line here, this is a good opportunity to enter long to the upside, and then um, we could do another trend line and figure out where could be the exit for this particular trade. Take the high. So I just drew a basic support line there here. So we could take the high here and then no, not doing that way. Take here. And take the low. Right there. So basically you're doing triangles to kind of get started on. This is just basically building a foundation. Basically, that's where you want to start building a foundation, and we'll go through some other strategies um, that you might need to adjust. So this here is basically a kind of a price key price there. You have one, two crossing there at the same time. If it fails here, of course we're gonna go lower, but I'm still hoping that it bounces somewhere in this trend line here, and then you could take a long from there. Now anything can happen, of course. Before I go further any further, I'm not a financial advisor. This is for educational purposes. Any risk that you risk in the markets or put in the markets is at your own risk. Um, Anything that you learn here, you should do your own diligence um, for placing any money in the markets or any trades in the markets. So that's kind of my disclosure for today. Um, so moving forward, um, so this is a basic chart on basic the foundations, trend lines and support and resistance uh, is your keys. Um, Prior price will give you where it um, got rejected or it used that as support. It got respected. I'll go ahead and clear this chart again. We're gonna move to trying to cover as much as I can on some of this stuff. So we're gonna add a few indicators over here. So we're gonna start with one of my favorites, just to get started and for people to kind of get an understanding on how the averages move um, once you line them up. So we're gonna use 200. So we're gonna use the 215. Um, the 200 is gonna be in it's like orange or yellow, and the 15 is gonna be blue. So, of course, on this chart here, you only had, I think, an entry here to go long. Looks like back in April was the entry to go long on this chart based on um, this strategy, the 15 and the 200 on the 4-hour chart. So moving forward, if you took it down here at the bottom and in April, well then you would have got a good price on there. Um, and if you held it till it crossed again the 200, well then it crossed right here on the 200 here. So you would have made decent profit on on that particular trade. You started here. This is where you crossed. So you would have made decent profit. Now looking forward, you know, I'm paying attention to here again. Um, looks like the 15 and the 200 are about to cross again. As you guys saw from April. As you saw from April, once it crossed, it got a good decent move. And this was the drop that everybody thought the market was crashing right here at the beginning of the year, February. The 15 crossover 200, we got this huge drop. And then if you would have entered here and then exited, down here, you would have still made money on the trade, but you would have made more money if you would have got out down here at the bottom. Once it started getting some support here at the bottom, you would have made more money on that. Again, this is a 4 hour time frame. If you go on a shorter time frame, we can see. That's not what I need either. We could go to now we're looking on a 10-day, 30 minutes. So 10-day, 30 minutes, playing the 15 and the 200 SMA on the 30-minute chart. You got a buy signal here. You got a sell signal here, buy signal here. If you bought here, this thing was still long, then you sold signal would have been right here. So if you enter here and then exit here, this is where I cross, exit. You would have captured that as profit. This is just basically a simple strategy. This is swinging. It could be done in any type of market. Just playing the 15 and the 200. Just basically waiting for the 15 to cross over, the 200 on whatever time frame you guys prefer to trade on. This is the 30-minute chart, and hopefully that kind of explains on that chart. Now we could go lower. Okay, we go lower. Five minutes. The 5 minute chart. Oh, this is just one day. We need to change that so we can see more days. All right, so the 5 minute chart kind of gave you several trades to trade on. Earlier entry, this is the short there. You enter there and then it crossed here, but it probably potentially could have crossed here or here. So you would have had to either exit some here and then exit some over here, or waited till it crossed again, and you still would have made your entry. And this is your exit. You still would have made decent money on that. And then if you would have taken the short again, or you wanted a short, you waited for it to cross over. You could have taken a long here, and then it crossed here again. So you still would have made a decent a few points there on that long. Or you could just wait it for the next short to come in. So then in the morning, it crossed there, and then it did not cross back up again to the following day. This is on the 5 minute chart, and this is 15 days of history. Again, the 15 and 200 there, 15, 200 here, here, here. You could have taken long here, and look at all that capital you could have gone. Um, then you could exit there. Could have short here, could have long there. This is just the basic. This is a swing trading. It works perfectly with swing trading. This is just basic. This is basically just a basic using two SMA lines to wait for a buy signal or a sell signal. Um, we could get a something more advanced, and sometimes something this simple will make you more money than something um, with a more advanced technique. Um, you could also use the 200 as basically a rejection on price. Let me make this bigger. Wow, that 200 is all right. So the 200 could act as support or resistance. I see that it acted as resistance on Friday. Um, right here, it acted as support and resistance. Has a little bit of support there, and then it basically price got rejected. Um, so let's continue here. So basically here, this is we all heard Trump got the coronavirus, so that's when the news hit. That's exactly when the market um found out that he had the corona, and this is what has the outcome of that. If we did not have that news, look at that blue line. It's clearly was thinking of crossing over that 200 SMA, trying to make a new high. News came in, and this is what happens when news comes in. Um, so always have an exit plan on that on your trade. So we are going to move to other strategies in a couple minutes, and then we work from there. But basically, the 15 and the 200, if you guys think that this could be useful for you guys, practice on it. Figure out if that's what you guys want to trade on, and then build from that. So we got the 15, the 200. So now we're gonna go to some of my favorites, which are a little bit more advanced, of course. We're gonna take the 15 and we're gonna turn that into a 13. We're gonna add two more. We're gonna add the 21. We're gonna make all this big. So we're gonna change this, purple. It doesn't really matter what color you guys make it as long as you understand your method of trading and how you guys want to use these indicators to trade based on that. And we got the 34. All right, so now we are the 34. I think that 34 is this one here. Yeah. So now we're at a little bit more advanced. We got several SMA lines on the chart. Um, and we are crossing over several SMAs. So my favorite one is a 34, which we just placed, which is this bottom one here. This bottom one here, 34, 21, and 13 there. So our favorite one is a 34. If it's below the 34, we are in a huge downtrend. Um, and as you see, this is what happened here. Um, the 34 is this one here. It got rejected. Guess what? Again, I mean, I could go, you know, backwards, a few times. Just keep showing you guys that. Um, but again, it's all strategies that I've practiced and developed throughout the time. And you can see the 34 here, it's above. We went up some, came back to the 34, got rejected, support. It bounced off that 200. That 200 is the main SMA. Bounced off the 200 and it continued higher. It got up above the 34 here and it continued higher. Above the 21, above the 13. It just showed a decent pullback on this drop here moving forward. So that's basically using trend lines on the chart. This is where you guys have to basically build the foundation on your trading to ensure that you get the concept. The concept is to understand the material first and then build from that. If you start using all these indicators, all this um, other stuff that makes trading a lot easier, you would get confused. So you had to start at a building a foundation. This is how I started. I built my own foundation. I have my own trading method. Um, I use other strategies, from other traders, and just take from what I need from them and put it towards my trading. So this is what you guys have to do. If you guys join these webinars, you could take some of what I do and then build from that. You don't have to copy um, to the dime, to the strategy on every method. So far, um, any questions? If you guys have any questions, you could type them. Any questions, Jermaine? I know you're on the stream right now. I'm not sure who else is watching. Any questions? Any questions? That's the reason I do this kind of webinar so people could ask questions throughout the week. My Facebook group chat. You know, people asking me questions, thousands of questions, and then typing something is a little bit different than showing somebody. I think a lot of people learn that faster by seeing what we're talking about. Okay, okay. Like I said, it's basically this is the simplest strategy that you could build on. I could go and add a few more indicators and try to confuse you guys more, which I'm not trying to. Not a lot of people use RSI. I know I do. For those that don't, I am using the Thinkorswim platform. For those that wonder what kind of platform I trade on. So we got the RSI. As you guys see, it was set at Wilder. I don't like using that setting. It's just my preference. You guys could use it at whatever setting you guys prefer to use it. The RSI can give you some confirmation. People like, oh, the Trump got the corona. We're gonna hear the market drop, but even the RSI was telling you at even before that time, before the news came out, that the market was basically overbought right here, and this is right here, overbought. Okay, so the market tells you, see, overbought there, overbought there, over, oversold. They bounce there again, oversold, oversold here, overbought, overbought, overbought there, oversold. There's a dip there. So I mean, this basically the easiest indicator to learn. RSI, relative strength indicator. Um, Again, everybody it wasn't expecting this drop here, but the farther more I look into the charts, well, guess what? Even the RSI was saying it was over, basically overbought. So it had to find a basically had to you know fix itself, correction. And this was the correction here, and this is what happened here. So um, just basic indicators um, to kind of uh, kind of help you guys. This is just one. There's hundreds and hundreds of different indicators. Hundreds. You just have to find the preference and take the time to adjust the settings on some of these indicators. And this is just basically default settings on the RSI, which it works perfectly fine on the lower time frame. It can give you kind of an idea when is something's kind of about to get reversed. Um, you see this here in the middle. You don't want to enter into that here. Um, for Sunday night, Monday, it's already oversold here. The RSI is pointing down, so I think we might get a little bit more sell, and then you just find an entry once the RSI is below here to go long, and then you exit either on the 50%, 50% here, whatever. There should be 50% there. Um, if price gets above the 50, well then it's gonna continue higher. Yes, you could use that 50. Like if you see here over here on this side, when it got oversold, it the 50 would have been around here somewhere. Um, and see how it got kind of rejected there. If you would have held, let's see this candle here, and then this is kind of 50 there, so it would have been this candle over here. See what I'm saying? Um, so that 50 also, just by looking at it, even with the SMAs, um, remember this is my 34 and 21, and this is my 13, and of course this is the 200. Remember I said below the 34 is bearish, and is that this one here, which is this line here. It basically rejected that, and it showed here on the RSI also, and it dropped again. So indicators could give you kind of a perspective of how things are gonna play out before they play out. So, but also having confirmation on you know something like this, you know something like this, or here when it's overbought there. Here the basically the 13 crossover, but the 34 was still underneath it, and the 21 was still way underneath it. So if you play the 13 and the 21, well then you would have long here, and then of course it crossed over again over here on this side, well then you could exit there, and you still would have had a few pips, a few ticks on the upside. Or if you're like me, if I see this huge red green candle here popping up, guess what? I'm gonna take profit just like everybody else here. So I mean that's how I basically play it out. um, so this is the art. Oh, yeah, that's a more advanced. I'm trying to focus on basically having you guys start with a foundation. You know what I'm saying? This is nothing else. Nothing. This is not Head and Shoulders. This is not reverse whatever. You know what I'm saying? And that's what I'm noticing in the group, that they're focusing. You guys are focusing on all these different strategies, and you guys are getting like confused. You know what I'm saying? You had to clear your mind and take away everything out of your charts and start over from scratch. And we're just building this chart as we go. And just by the RSI, it's giving you, signals on this is the 5 minute, 5 minute, 15 day time frame. Um, and where to enter, where to exit, based on the RSI and stuff. So, um, but yeah, the Head and Shoulders, the I don't even know what other ones we use. I don't even use those. A lot of That basically simple strategies. Basically, to know where you have to build your own strategy. You know what I'm saying? Uh, Build from there. And take whatever I'm teaching you guys. Take what you guys want from me, and then build your own strategy. Like, um, I've taken Rob Hosman's strategy. I've taken Anna's strategy. I've taken John Carter's strategy. I've taken um, Carmen something strategy. Um, and kind of build my strategy from that. You know what I'm saying? And that's why I'm like I've taken some other body, someone else trades on Renko charts. I have a Renko chart that I base basically for trend. I don't trade on it because it's a little bit harder to trade on Renko chart. You basically do have to take a little bit more risk on there. Um, on Renkos, and so depending on the size block. And then of course I trade on tick charts now. So I took that from somebody else. Um, this is basically a 5 minute chart, and it's basically the number one chart that most majority of traders use out there. The 5 minute, the 15 minute, and the hourly. That's what they that's what they use. Um, the 1 minute, 3 minute, those time frames are okay. Um, but the majority of big hedge funds and people that are trading are going to trade on the 5 minute, 15 minute, and hour time frames. Um, the reason I confuse a lot of people is because I have so many things on my charts, and it's hard for me to explain everything. And this is where I'm starting to try to focus more on pushing that you have to build a foundation from something, and this is where you have to practice that foundation until you master that foundation, um, and become profitable from that, if that makes sense. um, but yeah, that's basically the chart here. Again, this is a Q&A. I would like for you guys to kind of ask questions because there's not really you know no point of me doing them if I'm just talking. And like I said, I get a bunch of questions throughout Facebook throughout the week, and um, you know, the week can be busy for me sometimes. So, uh, any questions, Betsy, today? How did you do in the markets this week? Okay. You know why? I'm gonna tell you why. Because the bot is, if you don't have it on market order, the order is not gonna get filled. Okay. If you have a limit order, guess what? If you have a limit order, let's say for example you have a limit order for the Nasdaq to enter at 250, let's say 11250, and it gets to 11250, but there's 1,000 contracts waiting to exit or let's say enter there at 250. When you're live, you're a number, okay? So your fill gets, basically your order gets filled based on whatever number you are. If that makes sense. See what I'm saying? Uh, Right. Y- yes, it's a little bit. Yes, it's a little bit. When you have your money in play, it's a little bit more emotional. Um, so that's something that you have to like work on it, and that's what I'm saying. Um, build from that. Like, if you want to take trades only based on the 200 SMA, look, you could have long here, and then put your stop loss, down here at the pivot down here, but you could have made a few points here and exit here. If you put your stop loss down here at the bottom, you see where my cursor is? Well, this red candle would have never touched your stop loss. See that right here? It would have never hit your stop loss. So then you would have still been able to get a few more points here, but then it tapped out. You got one, two, three candles that kind of built resistance there. You know what I'm saying? Just based on this chart, you know. You right here. You see that right there? And then your stop loss would have been there. Let's see. Let's see, your stop loss would have been there. Look at this candle here. It barely touched. I think, well, because I increased the size, but I think it would have. It probably didn't touch it. What's that price there? 34. What's this candle here? The low was 34.75, and it's 34.18 on that thing. So if you would have put it at 34, it would have never got touched. You know what I'm saying? Um, and then you still could have potentially still played this 200, and then you still would could have got out over here. And now on this other red candle, well, then you would have got stopped out right here. See that on this big um hammer candle, I guess you call it hammer candle here. You would have got stopped there if you would have not taken your profits over here. But if you would have entered there, let's say if you would have entered here, that's 45, and that is 61, if I believe. Yeah, 61. 61 and 45, and you could have got almost 20 points. Okay, I mean 20 times 20, is $400 in one contract. So I mean, even if you would have got out, let's say $150 or 100 bucks, on a small account, you would have made $100. It would have been a green trade. Um, and that's the thing that Anna has a different method, and Anna posts her charts, and I don't think she does any more alerts on her normal group anymore. Um, but she mentions, well, I'm long here, and then target one's way over here, and guess what? People are following that. You know what I'm saying? So say she says, well, okay, well, I went long here, and then my R1's right there, and then R2, let's say it's over here. So then she's gonna target R1, and then everybody's gonna follow her trades or whatever. Um, and that's something that um, basically I don't do it, but I used to do it, and it got me to the mindset to where I wasn't becoming any better. I was always waiting for her calls. You know what I'm saying? And then whenever I did my own thing, I lost money. So I was waiting for calls, and then she switched around her group, and now she wants money to join her group and stuff to get alerts that I'm already aware of um how to do them. So um, but yeah, it's hard, to kind of um figure out your own strategy, and this is where I'm trying to build that strategy from, trying to help you guys how to make it simple and not make it too complicated. So, things should not be complicated. Trading should not be complicated. But it is, because if it wasn't, well, then everybody will be doing it. So, um, again, you could do the fibs. We could go to the fibs again. We could start from the low here to the high of this candle here, and then this is your fibs. It got down to this level down here at the bottom, the 138. Got below the zero again. It tested it several times throughout the day. Then once it broke again, I think he's gonna try to test this 132.10 area. It looks like. I think he's gonna try to test that again on Sunday at open. The 200 is basically pointing down, so until it starts curling, well then price might change on that. But this is more advanced. Like the fibs are a little bit more advanced. Because you have to figure out what you want to do with them. Like even without looking at the fibs, I would have taken a long here. This is above the 34, the 21, and the 13, and then my 200 is over here. Well, then I would have targeted the 200 from the bottom, and then once I got my fibs, well then I would have not entered any more trades, and if I did, well then I would have shorted below this green candle here. Like, put a sell order there, and then my stop loss would have been using one of these fibs here, this price here. That would have been my stop loss, and then just aim back to this zero line again, or even at this 50 line here. So from here to here, it would have been the easy trade. You got 5, 10 minutes. Yeah, I probably would have taken profit there. 10-minute trade from basically from here to here, no stress. Um, you should be able to. It says everybody else can see my screen. I think everybody can see. Um, yeah, you shouldn't have to turn anything on if you're on the group. It should come on. It should. But this is basically um, more advanced using fibs. They're very powerful if you learn how to use them, learn how to retrace them. Um, but I tend to confuse a lot of people how to use these for some reason. So this is the reason why I started the webinar with SMA lines, um, to show how they, how you could use them, instead of worrying about every indicator down here at the bottom. Um, you can use, this is the 21 and the 13. You can use that as a crossover. Above the 13, once it cross over, you take a long. When it crosses over again, you take a short. But on the lower time frames, you won't you won't make a lot of money on the lower time frames. As you see, they could cross over within an hour or so of each other. This one here would have been a short. It potentially crossed over there, so you see that's not a lot. Um, and then here cross over there. So then this one would have been a better trade here. You would have taken short here and added here, and then exit when they crossed over. So that would have been the price that you crossed over based on the SMAs. Um, any other questions? Any questions about charting? Um, Now you don't hear anything? Okay, can you see the screen now? Okay, so it was some drawing. So I'm open for questions. I've been on for an hour and I'm trying to make it short. I do have a family. I do take time away from my family to, kind of help you guys. So I'm taking questions right now about anything. I could put more indicators on here. Um, and show you guys what I mean, and we go from there. Betsy, I can't hear you, Betsy. Did anybody hear Betsy? Cause I can't hear you. I can't hear her again. The audio on Discord, I guess it messed up again. My audio is messing up again with this freaking app. Hold on, let me see. No, hold on. All right, Betsy, can you speak again? Okay. I got this. Discord is acting up. I don't. They did that last time. All right, I can hear you. Yes, I can hear. John Carter. Everybody knows. Well, nobody. I guess nobody knows John Carter. John Carter's strategy is based on the Kellner channel and the Bollinger Bands. I'm gonna go ahead and put those on so I kind of explain um, what it is. Yes, it is shared. I could see, is it? You see it now? It should be able. You should be able to see it. I saw my thing says sharing still. Can you see it? All right. So John Carter's method is Bollinger Bands. Oh, let me change these because. All right. So we're gonna use the Keltner. We're gonna use red just for the sake of the video. And then on the Bollinger Bands, we're gonna use blue. This is basically to keep it a little more simple. All right, so based on his strategy, we got the Keltner um, and the Bollinger Bands um, on the outside. He says when the Bollinger Bands are on the inside um, here, but well, I'm not sure. It has to be something with Discord. Um, yeah, it's yeah. I don't. Yeah, yeah, I don't know. It has to be something with Discord. Um, so John Carter says when the Bollinger Bands are inside the Keltner, volatility could increase um, from his strategy. So we had the Bollinger Bands here and, and here. So volatility, as you see, if you take a trade, it's inside the Keltner is the red one, of course, and the Bollinger Bands are inside. If you take a trade, can you see the screen? You can. Okay, okay, okay. All right. So based on him, once the Bollinger Bands are inside the Keltner, volatility is about to increase, and normally you take a trade when if it's at the bottom, well then you take a trade going long, and then of course if it's at the top, well, then you short. And this is what happened here. The Bollinger was on the inside, Bollinger was on the inside, but then you take a long, and then you could exit on top. Um, and then you could have taken it again to the downside again. Um, that is kind of his his method on how he uses the basically it's basically a squeeze since the Bollinger Bands are based on price action. Um, that's basically what he mentions on on his webinars and stuff. Um, his option trading um, course is totally different than what his day trading is. Um, but that's basically how he uses the Bollinger Bands um, to enter the markets. Again, not all strategies are created created equal. So based on that, you could always um, figure out your own way to develop from that. You could take that again here, where the Bollinger Bands were on the outside, Catlin were on the inside. See this one here was on the inside here where my cursor is. You could have taken that long there, and then came back down here. The Bollinger Bands expanded on the outside again. Um, so that's you could have missed a few trades here based on that strategy. That's what I'm saying. That you have to take some Here's one here. The Bollinger Bands are on the inside, and it's on the inside, and it's at the bottom of the Keltner and the bottom of the Bollinger Band. Likelihood, you know what I'm saying, is going to take, you know, gone upside. And then, of course, you see the RSI down here at the bottom, too, you know, showing slightly oversold. So, um, based on that method, that strategy, you know, you use other indicators to kind of give you a perspective on where to get in on how to time it. But you have to practice this. So this is I haven't even mastered the TT squeeze based on the Bollinger Bands and the Calvin channel. I haven't even mastered that yet. Um, so it's kind of it's all in basically a learning experience. It's on it's all default settings. All these yes, all these are default settings. Um, yeah, these are default settings. Now all the yes, Kellner is click on it 1.5. Um, but you could always mess with the settings to kind of give you a better a better chart. Okay. Um, playing with the settings could give you a better, you know, entry or better a way to trading. That's why they have it that way, so you could play with the settings and build your own strategy and stuff. You know what I'm saying? Um, I've talked about this in the previous past. I don't know if anybody uses them. The pivots. This is basically your support and resistance pivots based on the price action that's currently happening. As you see down here, you have a support 2. No, I guess this is support 1, support 2, and then support 3. And your purple line is your average price here. Um, so that was the average price. That's what on Thursday or Friday morning I was bullish on it. I took a loss. A small loss on the micro lot. And then I turned back around and switched it down to, you know, to short. And then I had one exit down here at this pivot here, and then my second one actually got filled in the morning down here. So, which I've entered a lot down here on top and never got, you know, it never retraced back to the original price. So, that play kind of got worked out good on a micro lot. Um, so the wooded pivots, if anybody's interested in finding a pivot study, this is one that I recommend. Um, and then, you know, base it on that. That's basically your supports and resistance, your target 1, your target 2. If you short it here, well, this is would have been your target 1. This is your target 2, and this would have been your target 3 for the day. Okay. Um, and normally, of course, it retracts back to target 1, which it did in the morning. It retract back to target 1. If that price held, well, then the price would have gone the back to the average price. It would have been this price here. So if this price would have held, it would have hit that. And then if this price got taken out, well, then it would got back up again. But it didn't hell. Basically resistance there, and then it got rejected again. You could target again this low here and exit there. But some people, we all get greedy sometimes, and then like, oh, I want some more. But then you could have targeted this here. Um, but that's for a different day, different story. um, this is basically those studies are the ones that I recommend you guys starting with. Um, and just work from that. You have to work on building your own strategy, building a foundation, um, and just build from that. Like I said, I've taken several strategies from other people. The wooded pivots, everybody's like, "Oh, how do you know the price was gonna retract to that?" Well, I didn't, but the study did. You know what I'm saying? The study magically calculates the support and resistance on based on the price action. Any questions on that? The wooded pivots are they're based on the fibs are based also based on price. It's just by percentage. Um, but Fibonacci, you could retrace that from there and to the low. They're fairly close. See that 50%. If that 50% did not help, well, it's gonna go lower, and it went lower from that. That 50% again over here. The 618 got rejected over here. Um, so it just really depends on what a strategy do you want to use. Like I said, having like if I give somebody this chart here and they're like, well, what am I looking at? And they don't understand the chart. But if I took the chart, I could understand everything that's on this chart because I've used the Fibonacci's, I used the pivots. Um, I've used them before and I kind of mastered those already. But if somebody that's just starting out and I gave them this whole chart here, they're like, "Ooh, uh, what is all that?" You know what I'm saying? Um, so we started from the SMAs and then we added the Bollinger Bands and the Keltner, and now we added the pivots, and now we have Fibonacci extensions. Um, based on that. Um, see what I'm saying? And then of course you have. Oh, I think I have. What's that other study? I have supply and demand. I think that's what it's called. Yeah. Then you have supply and demand. Charts. Like this. It's just it's thousands and thousands and thousands of charts, indicators that can make your life so easy, and then make your life a little bit harder to understand the charting. Um, it tells you how many points from here to here it was plus, and then from here to here how much you could have made in those points there. Um, it's just different studies, um, based on that. Oh, like I said, I have other studies that I use. Um, no, alligator. No, I don't think. I don't have. I don't think we have alligator on TOS. I think. I don't even know what that is. Is that Williams? But I don't think that's alligator. It is a Williams alligator. I don't even. Yeah, there's so many indicators on here that I don't see. Once I put all that, it's just. I think this is it right here, if I'm not mistaken. But let's see. It's dark blue. Let's change these to whites because that way I understand which one is it because we have so many here now. All right, so it looks like a three SMAs from from the charting itself. It looks like that's what the indicator is based on. Three different SMAs. You got one, two, and three. Um, so it's basically the same strategy, Jermaine, that using these other ones over here. Um, it's basically what it is. Basically, I guess you're waiting from one line across the other to go long, and then that line to cross over to go short. I'm guessing that's what this alligator indicator is, right? Yeah, yeah. Basically, yeah. Like I said, if something does work, there's no need to change it. Um, the this here actually um looks decent. Um, from the white lines I'm seeing is following this 13 here, uh, and then this line here is following this purple line, I guess, and then this one is here following this one here. So yeah, it's based on I guess three different SMAs or wild. I guess it was set on wilder settings and stuff. Um, like I said, it's one of those strategies that if something does work for you, hey man, go for it. You know what I'm saying? Um, I like the crossovers. I mentioned that before. See over here, how all three of them are here, basically crossed over this top one, cross over the middle, and then cross over the bottom one, and just you know showed a downtrend on that. But yeah, like I said, I'll keep an eye on it. I'm kind of interested in how this one works, but I've never tried it. it yeah, right, right. Okay, okay, okay. Yeah, like I said, it's there's a lot of indicators and a lot of things out there. That there's no right or wrong way to trade the markets, and I keep telling everybody once you build that strategy, um, build from that. You know, yeah, I guess well, this is just that one simple indicator. Took everything else out, and yeah, it's basically basically it's three moving averages like I had previously. Uh, these are set at, yeah, this is length period. Yeah, they got the 13, the 8, and the 5. So if you would taken the 13, the 8, and the 5 and set it to Wilder, that's what you would have got. Actually, I like the simple better. So I trade on simple moving averages. Um, because you see, if you set it up to Wilder, see that if you would have long over here, it would have tell you to exit over here somewhere. If you change it to exponential, You had an exit there. You had a perfect exit there. You set it to simple. You still would get the same on there. Um, it just you have to play around with the settings on some of these indicators. You just can't take an indicator and say, hey, this is what I'm going to use and have it on default, because default is going to give you choppiness, so you have to play with it a little. Like I said, just by looking at it, that's what it is. It's three SMA. It's basically playing the same strategy I showed you earlier with the 13, 21, and 34. Um, you know what I'm saying? Let's see. We change this to different colors. See how we change this to screen. All right. So now we have different colors on these. So just by somebody telling me, "How here you go, trade on this based on that, learn from it." Um, the I guess the blue could have been the signal on this one. The green, yeah, well the green crossed over the white. So the green is a signal actually. So then green over here would have been a short, and then your stop loss probably would have been somewhere up here on top. So your stop would have never got hit, and then you could have taken profits down here at the bottom when the RSI showed oversold. So yeah, I could see that this indicator could be potentially, interesting. Like I said, it's something that's, if it's working for you, man, hey, keep doing it. Power to you. Like I said, I'm here to teach other what I know. But if you have something that's working for you, don't change it. Don't try to. You could build from that. Let me put it that way. Like keep your same indicators, and then build from that, and adding more confirmation to your trades. Any questions? Any other questions? All right. Irene, Betsy, YR, YSR, Alifia, questions? RSI. RS. Yes, that's the RSI at the bottom. Um, and then the one that you're looking at the screen is the Williams alligator. Um, that's what Jermaine uses for his trading. And obviously, it's the same thing as the 13, 21, and 34 strategy. So, um, any questions, Irene? Any ladies' questions before? Are you sure? Facebook? Facebook. All right, let's look at Facebook. What are you trying to do with Facebook? You Okay, you got a call before news came out. Okay, so le- let's let's see the yearly chart, because this is what you want to look at. You don't When you buy options, you don't want to look at other stuff. Um, all right, so based on the alligator, it is on a downtrend. It's basically in a box right now. Um, this is a box right here. But the green line crossed over the blue line, and the green line is crossing over the white line. So No, well, I don't know. It must be you. It has to be your internet. um, Facebook. On Facebook, this is what you do on Facebook. I trade options on stocks now, based on John Carter's option strategy. Um, so you would actually, if you could find along like this is support here, so you would actually sell. What's the price there? You can see the price. My screen's like way up there. Uh, all right, so that 240. Am I what? N- No, it's delayed. It's the live stream is always delayed by 10 to 15 seconds. Um. Okay, so this is a daily. Yeah, this is 5 years set on daily. Okay, this is a 5 year chart. Um. So I have marked basically just by looking at this chart on Facebook. Um, I have marked um, basically where I think price is support. It was resistance there, resistance here. Um, then it kind of gapped up here. It probably has to fill that gap there. I haven't looked at the back of the chart. It probably don't even have to. Probably don't even. It's our final move. Okay. Yeah, the live stream is a little bit delayed. I think I'm recording it, so hopefully, hopefully it's not that bad. But the RSI is pointing down. But everything pointed down, yeah, on Friday. So this doesn't mean anything. Um, but I think the volume, sellers came in on that day. They took over because the markets were red, so they were gonna try to push it down. So for option trading, I personally, if I was bullish, I would have never sold a call. I would have bought a call. I would have sold a put credit. Guess what? Because if if and I would have sold this strike here, which is 246 or something like that. So I would have sold like the 250. Um, so if this trades here like this, well then you lose money. Okay, and then if it goes like this, or you make a little, and then if it goes like this, and goes like that, goes like this, goes like that, goes like this, you lose money when it's like that. You make money if Facebook does this. Okay, I make money if Facebook does this or this. Yes, when you are where you're selling put credits, you're collecting credits. Okay, you're selling the person that's like for me. If I sold a put, well, I'm being bullish. Okay, um, and someone is being bearish. Okay, so this this is me. This is you. Okay, let's assume that if if Facebook trades sideways, guess what? The let's say I sold you the put or whatever for let's say $1. Okay, you lose money because if Facebook does this, um, your put will decay. You lose, let's say, goes to 90 cents, and then goes to 80. You know what I'm saying? While I make, you know, my option, well, I'll go to 92. So then you lose, let's say 10, you lose 20. Me, I make what you're losing. I make 10, I make 20. See what I'm saying? Now, let's say, for example, um, the market, um, you drop. Okay, so you the put for $1. Okay, well the market dropped. Okay, but I still hold that contract for $1. So then you made, let's say $1.10, $1.20. Okay, so you made plus 10, plus 20. This is just an example. You know what I'm saying? And then I lost. My option went down. So then I lost. 10, and then I lost 20. Okay, but then it never reached my strike of whatever it is at the end of expiration. Okay, so you walked away with, let's say, if you close that option for 20 cents plus or whatever, you walked away with profit. But I still made my money regardless of the thing. So I never lost money. See what I'm saying? Even if Facebook comes back down and touches that price, but it never closes at that price at expiration, I still get to keep this $100 or $1 credit or whatever. And now if Facebook goes higher, well then this here will decay a lot faster. Even if I have next week expiration, the dollar, if it, let's say if it moves from here to, let's say, to the high, well then it would automatically go to 5 cents. So then I already made $5. Of course, you made more because you bought it straight out. See what I'm saying? So that's a little bit on the. You have to time it right, and John Carter says, and this is John Carter's method. You become the market maker when you're selling options. You become you place a trade, and you basically saying, I'm the market maker. I'm gonna sell you this, and you get out whenever you want to get out. Okay. When you're buying the option, you have to wait for that stock or that future or whatever. When you're buying the option, just outright, you have to wait for it to move. So you're in the mercy of for the stock to move. While in another case, I'm selling the option. I don't care if it moves. You know what I'm saying? It could stay at the same price. I'm gonna make money regardless. You know what I'm saying? If it stays sideways. Now, if it moves in the direction that I'm going with, well, then I'm still gonna make more money. If it comes down to my strike, well, then I lose money, and I could decide to either roll it over and get additional credit, and I still be making money because I'm getting an additional credit. You know what I'm saying? When you're rolling it over. So let's say, for example, Facebook, um, let's say, and this is an assumption. Facebook comes back down to here. Okay, so now the let's say you bought a put, well then I sold you the put. Now it's in the money. Okay, so now that put, instead of I sold it to you for $1, so now that put, let's say, it's worth 5. So now I'm the negative 400. Okay, on this trade. Now once in the money, you're at risk at getting assigned stock. Okay, so that is the risk on selling options. Now, if I still believe that Facebook is gonna bounce off of here, you see, let's say he comes on here. Okay, this is right there. And I was like, well, it got down to this price again, and it gapped up. So it came down, it filled the gap. So now it's a 50-50 chance that it could continue lower to down here, or it's gonna make it bounce back up. You know what I'm saying? So at this point, either I could close it for a $400 loss, or I could roll it over. Okay, I could roll it over. Yes, yes. You close your uh, current, and then you open a new one, longer frame, longer time frame. Okay, so now let me explain to you. All right, so let's say I had this here. Let's assume it was set at 246 or something like that. Um, I said I sold those. Well, then I think Facebook is gonna recover, and I'm like, okay, well, I'm deciding to take a longer time frame. Let's see, price, and then all right, so I decide to set 229, 230, yeah, 229. So this price down here is 229. So now this option here is in the money. All right. So now I think Facebook is gonna be. I think it's still bullish. All right. So I'm negative 400. Okay. So now I will have to look for an option to sell that I can get $4 additional credit. Okay. When you roll it over, you want to roll it over to where you have zero losses. You're following me? Or I'm, I have a, okay. Yes, this is for selling credit spreads. Um, no, 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 no. This is this is basically a scenario where I so yes, I am repairing a losing trade basically. Okay. Um, yes, I put okay. I sold the put credit spread. The let's say assume Facebook comes down here. Okay, I sold this strike here. This area here is in the money now. Okay. All right. That's in the money. Let's assume that I'm down $400 on that credit spread. Let's assume that. Okay. I don't want to take a loss. I still think that Facebook could recover. Okay. So now I roll it over to longer time. But now I'm down $4 on that credit spread. Okay. Basically $400. You want to sell a put credit that's going to give you $4 back, giving you back what you currently lost. That way, your losses for that trade zero out, but you collected for additional dollars. So basically, if you initially sold a credit spread for $1, you're gonna make with this additional credit, you're gonna make at the end of the trade $5 because you never took this loss. You covered it with additional credit. See where I'm going with this? So now this trade becomes a 5x trade. That's how you roll a credit over for a longer time frame. You don't have to pick the same strikes because they're in the money. Um, and you're risking it being assigned to stock. So then you would find one that is lower at a longer time frame. It could be 4 weeks, 5 weeks, 2 months out. But you're basically taking these losses here and zeroing them out with um, the additional credit. And now, of course, you get to keep the you get to keep the basically this initial here, um, and then once that Facebook comes back to where out of this in the money, well then you keep the money that you basically collected. So you're basically taking the market's money. That's essentially how you're doing it. Doesn't make any sense, or did I lose anybody there? Well, I posted several um what I said, several stocks that I was on trade. Um and most of them, are mostly winners. Everybody was bearish on Tesla. I also put credit spreads on Tesla last week, and I made what my average, average weekly goal is. So just assuming that, you know what I'm saying. Like I said, that's a different ways to strategies. Um, the RSI can kind of give you on the daily where is it gonna go. See how it's oversold. So if you would have timed here, let's say if you would have timed here with the RSI and you follow the RSI in the daily, you would have saw a put credit spread down here, and then you would have either still held or exited out a couple days later. You see, you went at one. This is your day one, day two, day three, day four, five, and six. Basically a whole week. This is a whole week here, and then of course you got here, but you still making money because if you sold it down here at the bottom, you collected more money down here, because it was closer to the price, and then you still making money. See, it's still sideways until it comes back here or whatever expiration, whatever. If you choose 2 weeks, but then you still got, you know, five more candles that have to be built for that day. Daily chart. To be you only need $250 to start selling credit spreads. You can sell credit spreads on AMD with 250 bucks. Okay. AMD is a very volatile stock. It moves crazy, and you can start selling. A lot of people start with that with AMD. Um, and with $250, you can start with AMD and selling credit spreads. And look at that chart. I mean, it's just insane, 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 insane. Um, it's continue to make the new highs. Like it's gonna get make up here. It's gonna come back to the highs, the previous highs. I posted in another group that uh, last week was a buy for AMD. If you wanted to buy shares, it's a decent. It was a buy, and it is. You could have made some money there, or if you traded options, if you sold put credits on this red day, if you want to sell put credits, you wait for a red day because the puts are always going to be higher. They're going to build more premium on them. Um, so you want to sell put credits on a red day. You want to sell call credit spreads on a green day. Okay. So let's say AMD, you say AMD might be, let's say like here, Thursday. Okay. You say, well, I think AMD is gonna drop. If you saw the call credit spread on Thursday, well, look what I did on Friday. If you could have closed it for a profit, one day trade. You know what I'm saying? Just one day trade. Um, no, I have I have a base it on the charts. If my target never, let's say for example, I sold a credit, put credit on AMD down here, but it's longer term. I didn't do 2 weeks. It's like a month out. Okay, and I collected because a month out you could collect, 11, 12, 13, $20. You know what I'm saying, on a credit spread. So if AMD is not even clear near my strike or whatever I sold, and the chart showing that it's still bullish, I'm just gonna keep it. You know what I'm saying? Until that chart gives me a confirmation that it's gonna reverse. And even if it does reverse, if it doesn't get near my strike, I still hold it. You know what I'm saying? I have um uh Tesla that I bought, but I saw put credits on Friday, and they're in the money. We're close to in the money. You know what I'm saying? Um, and I'm just holding because they're expiration, December expiration. I bought 430. I think that's what the strike I sold. Um, so but that's December. Like I said, it's everybody's strategy is a little bit different, but I think Tesla is gonna be a $2,000 stock again. So I'm not worried about them being in the money right now. Now somebody could assign, let's say they're douchebags and they're like, oh, I'm gonna uh take this assignment on these puts. Well, guess what? You know what I'm saying? They're being bearish against Tesla. If Tesla flies, guess what's gonna happen to their short stock? They're gonna lose money. You know what I'm saying? And guess what's gonna happen? They're gonna have to buy it back. And by buying it back, you're pushing the price higher. So nobody's gonna. I've never been I've been assigned to stock on a long short that got in the money when I started trading credit spreads because I didn't understand them. Okay, so that's the reason why I kind of got away from credit spreads until I found John Carter and John Carter's uh, um, option strategy um, course and stuff. Um, but he explains, don't take a loss, roll it over, get more credit. You know, if you get additional credit, fine. If you get enough to cover your current losses, hey, fine for you. But as long as you think that the asset that you're trading is gonna go in your direction, okay. But John Carter doesn't stay long for trades. He does mostly 2 days to 2 weeks out. He doesn't do long term. Only I think the only one he has right now long term I think is Tesla, and Amazon. Yeah, and Amazon. I think he has some longs on Amazon and stuff. And Tesla. Oh yeah, yeah. He don't like Tesla. He don't care if he's in the money. He's like, I don't care. I'll keep Tesla stock. So if somebody else is being bearish on Tesla stock, hey, it's their loss because I make money on getting it at a lower price. So but does that answer your question on Facebook? That's what I'm saying. That if you want to be on the if you have to risk a little bit more to sell credit spreads. That's the thing. You do have to risk a little bit more. Um, but you don't have to look. Let me tell you something. You don't have to look at the tiny buying power. Okay, let's if you're starting out, okay, and you're growing an account and you're doing credit spreads every week, okay. Um, and stocks a little bit easier than is on selling or doing on NDX or SPX. Okay, I've gotten burned on 0 dates on SPX because I was following Anna, whatever, and Anna closes hers. You know what I'm saying? And I didn't close mine because I was starting out on that on 0 date SPX or whatever. Um, but if you make, let's say you have $250 account, you do a credit spread on let's say AMD. You know what I'm saying? Let me see if I can pull up the chain here. Uh, all right, so this is AMD. Let's see if you're bullish. So let's do. I don't even know what I picked. I think I picked. My screen is too far away. The 80. Okay, you could do the 80 strike, and if you do 5 points, you collect better credit. But let's just say you do 1 point credit spreads because you don't have the capital. Okay, so you do one credit. Okay, so you don't have the capital, so we do 1 point credit spreads. And I think this is you collect $38. Okay, but your buying power is $63.30. So yes. So for AMD, if the asset stays above your strike price, which is $80, you make $38 at the end of expiration. Okay, which is this Friday if you sold this strike price when the market was open. Um, Now you have $200. Okay, so we're gonna do something here. If I We're gonna since you know how much credit costs. Shoot, wrong one. My screen's flashing. Okay, so now you have three three credit spreads. Okay, your capital you have $250. Your buying power required is 189 or $190. Okay, you collected $114. Okay, you're starting with $250. This is just keep an open mindset. So let's say you sold it on Friday. Let's say you collected this on Friday. Okay, for next Friday's, well, this coming Friday's expiration. Well, you collected $114 on that. Let's assume that um, by let's see, what's my chart? Let's assume that it gets up here on Monday. It opens up on Monday, and you know it gets up there. Well, then that credit spread is now you made a little bit of money, but you sold three. So let's assume that you want to make 20% um, on your return. Well, then you could close it at 20%, which would give you, help me out. I'm not good with math. um $25. Okay, so you make $25 and you close it, and then you do that a couple times or whatever. Um, and it helps out. Let me share this other screen real quick, and I'm uh, I might be ready to get off of here because this is um being too long. Uh, all right, so we are gonna do this. Why is it not zooming in? All right, so I don't even know why is it doing it this way. I'm supposed to show two. It's only one. Quantity down. Oh shoot, I'm doing something. I guess Tastyworks is messing up too. I I think so. Okay, well let's. I don't know why it's not letting me zoom in farther in. Okay, well this is Tastyworks, and this is your P&L. This is the price. Yeah, the price is well. Yeah, the price is supposed to be you collect 38 cents. I think that's what. Yeah, we're selling. I think it says we're selling. Yeah, this is one point. So basically, as long as AMD stays above here, or then it gives you your yeah yeah. It's on top. If you see that little icon on top, that's how much money you collect. And if you see this over here on top, that's how much money you collect on that strike price. That's how much money you make based on based on that. No, John Carter. This is the amazing thing about John Carter, and I recommend his course if you guys have the funds to buy his course. I'm not saying that you should go and purchase, but if you do have the funds to take his course, I greatly I recommend it. I'm taking it right now personally. So he does not mention anything about Delta, any Greeks, nothing in that script. It's all based on charts. Okay, it's all based on price. He bases his strikes based on supports and resistance. Okay, and then um he has this is Tastyworks. This is his indicator here. If you guys want his indicator and free, you guys can open an account with Tastyworks and it's free. You guys, this is John Carter's indicator. This is John Carter. This is what it is. I don't know the formula. I cannot access the formula on these indicators, but this is his indicator here. He partnered with Tastyworks. So Tastyworks is paying John Carter now for them to basically, I guess, sponsored. You know what I'm saying? Or franchise his indicator. Um, so this is John Carter's indicator here on Tastyworks. So if you guys want John Carter's free indicator, get a Tastyworks account. That basically this arrow here is a sell, okay, and this is on Tastyworks or John Carter. John Carter's is basically ready, aim, fire. This is what this indicator is. No, I do have the ready, aim, fire on on basically TOS, but I'm not allowed to sell it or share it. You know what I'm saying? Um, so yeah. So let's see, did it plot? I think it's a, it's the first three um uh basically the first three. This is its indicator here in the bottom. So, but no, Tastyworks is free. TOS you had to pay for it. I just said t- no. And Tastyworks is gonna be the first six indicators up here on top. Yes, you got one, two, three, four, five. Yeah, five. One, oh, six. It's gonna be as soon if you have a Tastyworks account, they're gonna be the first six. I don't. I don't. I don't have. It doesn't have John Carter and stuff, but John Carter mentioned it that he was gonna partner with Tastyworks. So Tastyworks has his Ready and Fire. It looks different than TOS, of course. Don't take it with a grain of salt. The Tastyworks indicator, it's okay. It's not 100% because you can't change the settings on it. You know what I'm saying? Um, you know what I'm saying? I could go to properties. You see, you can't. I mean, you could only change a few things, but you can't change anything else. So it's not very customizable like yeah, like tasks. You see your buy dots, your sell dots. If I see this it tells you on the left side, it tells you you got a sell signal, which is this here, and then the purple line would be your buy stop loss. So if you went long here, well then the purple line would have been your stop loss. Um, and then you didn't get a signal there. You got a buy dot here, and then your stop loss would have been following the stop loss here. So it's not 100% accurate, just like any other indicator. Okay. Indicators. You hit on indicators on Tastyworks. And then you got one, two, three, four, five, and six. The first six on top of the list are John Carter's indicator. Um, but it gives you your stop loss. It gives you your buy signals and your sell signals. See, you got your buy signal here, but you got the red dot is your sell stop. See over here on top. If you look here over here on this corner here, this yellow dot here is your stop sell signal if you went long. So this is your, if you went long here, well, this is your gonna be your stop sell signal. Basically, you're gonna buy it back or sell it here at this point. Or if you're short, well then this is basically your trailing stop. This is basically how it works. If that kind of makes sense on that, on Tastyworks. Uh, One of the things that you have to wait for volatility to hit. He follows volatility, um, and then he places his trade based on that. But his trades on the 30-minute and on the daily. So all the other frames are, he don't even look at those. So if you want to base it on a 30-minute chart on AMD, he still don't have a buy signal here at the end of the chart. He had a buy signal here and then a sell signal here. So he would have bought, it would have sold, or you could use it as options too. You would have bought the call here and then exit over here, and you would have been done with that trade, that one trade. Now, if you're gonna buy a call on something, you want to go near the money, okay? Because that way, once it goes in the money, you are making more money rapidly. Once if the stock does move, okay. Um, if you sold credit spread, let's say puts credit spread, so he would have sold near the money if it's for the same week. If you just wanted to get a 30-minute, you know, trade or whatever, he would have sold near the money. He got a buy signal here. His stop loss would have been down here at the bottom of this red candle, and then he would have rolled it, you know, to wherever, you know, to the end of the day, since his stop never got hit. You see what I'm saying? So his stop loss never got hit. He always has a stop loss. Let's say he sold, let's say this strike here, but then his stop loss is gonna be here. So if price reaches here, and it's for him to do a day trade, he gets out. He closes. Now if he's gonna swing this trade here, he's still gonna have that stop loss, okay? But if it never touches, he's just gonna keep, you know, he's gonna keep it. So he gets a time decay and keeps the premium. Does that make sense? He goes out a month out. But it's really based, like, you could take a month chart. You could take a month chart, a 2-day chart, 15-day chart, and they're all gonna look the same because it's based on this 30 minutes. See what I'm saying? It's just gonna have more candles based on that 30 minutes. But he does the daily chart mostly. So you had a buy signal here on this daily over here on this right hand corner. I'm sorry. See that buy signal there? So if you would have entered there, put credit for this week's expiration, it would have been, yes, that's a buy there. That green arrow is a buy, and the red arrow is your sell. Okay. Um, how they are plotted is a formula that Tastyworks and John Carter, well, basically John Carter created and gave it to Tastyworks. So that's how this formula. these arrows are plotted. I can't say how they get plotted. You know what I'm saying? Um, but on the daily, based on John Carter's method, he would have entered in this arrow here, and then would have had 3 days, 4 days, run. You know what I'm saying? So you got enter here. You got your 1 day, 2 days, three, 4, and then if this was a week, then his put credit would have been zero out. It would have kept that. It would have kept the premium that he collected if he sold right below this arrow here. See what I'm saying? Now, if you would have bought a call, well, then you would have lost money on this candle here, on this candle here, this candle here, and this candle here. You would have lost money if you would have bought a call there. See what I'm saying? Because the price never actually moved. I mean, you would have made some money, I guess, since this is a uh, daily chart. You would have made some money. I'm not really sure um, how much that candle moved. Let's see. All right, so this candle here, the open was 74 and the high was 73. So if you went in the money for AMD, you would have made decent money on that. If you would have gone a week, but then you would have lost money between these two red candles here. This green candle here sideways, it came back to almost your entry price. Here, you would have recovered some money that you lost over here. And let's pretend this is Friday. I don't think it was not. It wasn't Friday. This, or let's pretend it was. But then you lost all the money you paid for it over here with this candle here because um you didn't exit out here because you were trying to be greedy or whatever. So no targets. This dots here are basically your stop losses. If you could use this to buy shares, and so it's basically your stop losses here. If you see it over here on this chart over here on the left hand side, your take profit, I think that's what it is. Yeah, stop, sell stop dots. No, the yellow dot or the orange dot. Yeah, you could use it as a trailing stop. Yes, yes, but you could also use it as an exit out. No, that's is all. This is all his indicators. That he all that on my Tastyworks chart. It's all John Carter's. All these here are John Carter's except the Bollinger Bands. Yeah, the Bollinger Bands are not his. The wave study. The bottom is a wave study. That's what he calls it. Or yes, I know. Trust me, all the indicators are confusing until you kind of get familiar with the indicators. Well, it could be like Rob's. I think all these indicators are based on a lot of. I figured out Rob's already, so I mean it's nothing. Rob says price oscillator built into it, um, and he has the volume oscillator built into it, um, and then he has a volume threshold study built into it. Um, yeah, for Rob's, yes, mostly yes. This one here, I've looked at. Yeah, I looked at John Carter's script on TOS, and it's about the same. Uh, Basically volume. volume, volume, volume. They're looking for increasing volume or decreasing volume. Um, that's how they come up with their formulas and stuff. So no, they don't have nothing on rate of change. Not that I've Yeah, not that I've seen on Rob's script. I didn't see anything on Rob's script, anything about rate of change, and I did not see anything on John Carter's script either for rate of change. It was basically I know it had volume in there more than once on John Carter's script. So uh, anything else is shoot, this thing is running 2.5 hours already. Um, any other questions before cut the screen because it's getting late. It's almost 10:30 here. It go is yes, it plots a signal or a trigger if the previous candle, let's say if it's higher, it plots a signal for increasing volume, and then they have another formula where it says it has to do with the buyers and the sellers. If on that previous candle the buyers were stronger than the current candle, well then the candle, the current candle stays red. You know what I'm saying? Or something around those lines. That's how that indicator works. That way you're not that way you're not exiting out on the green candle when it reversed or it could continue dropping. You know what I'm saying? Um, but like I said, most of them. Let's see, 5 minutes. Look at it. Look at it. AMD. I mean, you could have traded AMD at the open. It got spiked. You know what I'm saying, at the open, and then you could have sold there. I mean, you could use it to trade stocks easily. The signals are almost perfect. See this? Buy signal here, sell signal there. You could have shorted here again, and then your buy signals over here. Okay? Then you could have bought again, and then you could have sold here. You could have got, if you're sharing 500 shares or 1,000 shares, and 10-cent move, it's $100 every 10 cents. So, um, there is signal is almost to the dot, and then of course you would have had a buy here, and would have been your sell stop. So you would have got stopped out here on this candle here. And then if you would have got stopped out there, then you would have not trade this candle, not trade this candle or this candle. You would have entered it here because you got a buy signal, and then your sell signal is on 2 candles after that. See what I'm saying? Everybody briefly on this? Not. Well, I added the Bollinger Bands. That's not his indicator. The indicator is, check this the Bollinger Bands out, so that way you guys are not. I have no idea. That is his indicator. Yeah, and then he has this one. Looks like a 50 EMA, and then he got few trending stops. But you see on all these here didn't plot a sell signal, even though they were red. See that? The sell signal came over here on top, and then over here on top, the sell signal came over here. And you see this? Everything is sold, but another signal did not get plotted because it didn't fit what his formula is. So it did not plot another. It's no, it's being plot. It's being plotted on this candle here. His signal gets plotted on the current candle. See what I'm saying? Like okay, like here. Let's say for example here. See this here? See this here? And then look at the third candle. Got a signal there. But over here, it plotted on the second red candle. See this? It's based on volume, but over whatever formula he has going on here is being plotted on different. Like over here, it got plotted on the second candle here too. To bullish here, you got a doji, and then you got one green, you got another green, and then it got plotted. Probably this one here. I don't know. I've watched it, and it's well. That's the reason why Rob's is delayed. I've compared. I've I've com. Yeah. 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 Tastyworks doesn't have a replay, so I wish I can show you a replay. But John Carter's gets plotted on this can. Let's say this candle it gets plotted. This gets this sell signal, okay? But then it reverses. Well, then the signal goes away. And then if it drops again to meet his criteria, well then the signal stays. It comes back on. So this signal gets on and off, on and off, on and off. So you have to watch it. But it's being plotted on the candle that's being plotted on. But it has to meet the criteria that's on that formula. So whatever formula he's using, it has to meet his criteria to plot that signal. See what I'm saying? And that's the difference between Ross. Ross plots his on the next candle, and I watch both of them. Um, and that's Rob's is a little bit delayed than John Carter's. I'm not saying John Carter's is better than Rob's. It's just they have different scripts based on the parameters that their script is based on. That's what I'm saying. All indicators are used as guides. Is not meant to say, oh, well, John Carter plotted a sell signal, but it was delayed. You see what I'm saying? I could have made more money if it was, you know, earlier or something like that. It's just every indicator you have to take it with a grain of salt. You have to study it and see if it works for you. If it doesn't work for you, but then you find something else. Um, Rob's has worked for a bunch of people, you know, and he makes money off of it, and people buy it, and then people still buying it. You know what I'm saying? John Carter is in the same method that he wants to make sure that his indicator gets bought, and Rob's never partnered with Tastyworks or anybody other platform to even offer Rob's for free. I mean, for TOS, you still have to buy it from John Carter. But if you are able to get a Tastywork account and you could use just his signal and execute on TOS or execute on Webull or you know Robinhood or whatever other platform that you use, but still have the access to his indicator, why not get it for free? You know what I'm saying? So, um, You have to update it. They hadn't updated them or so forth. I had to update my Tastyworks, and it took them about 25 minutes to update it, get it up. Yeah, yeah, that's the thing on yeah, Tastyworks doesn't have. I don't like their charting on even on their mobile. You can put a lot of indicators on there, and it's hard to do. So I think this indicator is only on a computer device. So you have to be on a computer to be able to see it. Um, no, it's on the list. It's on the first. It's gonna be on top. There's the first six on top. Those are his. Okay. Well, as the first six on Tastyworks when you hit indicators on the platform. Any other questions? Because I'm about to. Is that what? Uh, Hoffman is his full name. Yeah, Rob Hoffman. He he has indicators. He had to purchase his indicator um through his website. It's about 7 grand, I think, for the package. Um, and it comes with not just one. I think it's like dozens or whatever. Um, and he does provide you with a course. He does provide you with free chat room and stuff. Um, he's partnered with Wealth Charts. If you're interested in some of his indicators, are in Wealth Charts are free, but Wealth Charts does charge a monthly fee, so keep that in mind. Um, and there's other indicators in there from other big huge investors other than Rob Hoffman in there. Um, he does have a channel. I forgot his channel. I know it's Rob Hoffman, but he runs another channel on YouTube. He posts his daily charts based for the. There you go. Become a better trader. There you go. He does post daily videos on his website on the for the S&P and some stocks, I think sometimes. But he mostly trades futures. Um, what else? But yeah, like I said, it's another indicator free for those that can't afford to buy the TOS indicator. Um, get a Tastywork account and just like I said, take it with a grain of salt. All indicators are different. I don't like Tastyworks the way they do their charting, but if I knew that he had partnered with Tastyworks before I took the course, um, I would have probably never taken the course and just would have gone with Tastyworks, which I had a Tastyworks account, but I would have just updated it and had his indicator. But I like the TOS better, to be honest. So, um, but any other questions regarding on charting stocks that you want me to look at? Give you my opinion on it. Just kind of last few questions. The anything that deals with volume. TOS has a volume. What is the name of that? Volume oscillator. I think that's the name of the the one that it plots volume. I think it's volume oscillator. I think so, but I think so. Let's see. They have volume accumulation, volume oscillator. Yeah, it's right here. Oh, yeah. Yeah. So this one's based on volume. It's like an RS. Hold on. Shoot. That's the RSI. So this one's based on volume. You could change the colors on these. You could actually change this to green and red down here in the bottom. Let me do that to make it easier, more visual, because I'm more visual and stuff. You could change the global. Okay, so basically what this volume oscillator means is the buyers here, like this red here, buyers are kind of dying. Sellers are coming in slowly. Orange, kind of they're kind of in a battle. You can see here. Then the buyers are kind of dying out as the yellow goes. That's why you got this side movement here. And then you got the green down at the bottom. Then the buyers are stepping back up. And as of Friday, look at AMD, it's turning green again. So buyers are likely to, kind of come in again and try to push it higher. Um, but their indicator is based on this here. See how it just basically changes colors and stuff. So it's gonna give you that once it reaches the high, it's gonna tell you basically what they use it is an exhaustion. The sellers are getting, the buyers are getting exhausted. So what? Yes, that is a volume oscillator. Also, they have the price oscillator. It looks similar to it too. Uh, Oscillator. No, that sounds. You could add the price oscillator too, and it could tell you the same, almost the same. See here, price is getting um, it's gone green, but you have to study these oscillators. Because like I said, most of those indicators that they built is based on these two indicators, and there's another one I think can't think of it right now, but it's based on these two indicators. Um, when the price, I guess, or the volume is higher or lower than blah blah blah, then the price, well then it's a sell signal. If it's higher than blah blah blah, it's a buy signal based on these two indicators. Ralph Hoffman has both of these in in his script, and then John Carter has both of them along with a threshold um, script in there, and TOS does not have a threshold script. So he must have came up with something, or somebody has come up something with a threshold indicator in there. So, but those are kind of the two other indicators that you could kind of get close to price action. Um, Basically, um, that does that answer your question? Well, I wouldn't mess with Ninja. If you're trading on Ninja, just use it for executions, and then do all your charting on TOS because it's gonna be a little bit harder to find a similar indicator on Ninja than than on TOS. If I'm showing you TOS, if you have the platform, you could have the executions on your right and then all your charting on your left. Oh yeah. TOS takes a lot of memory. hmm Oh yeah, MES and ES are different. M and Q and NQ charting is different. Um, y- yes, they well, like I said, and I've been telling them, price action is where to go, and Anna just switched over to price action. I've been telling her for what months already, but she was basing her trading on Rob's, whatever Rob's gave him. So yeah, they have a lot of them. Actually, this is I created one actually. Uh, Profits. So this one here, let's see if on demand works. Hold on. I don't see your TV. I see that you're sharing. I'm trying to see. I'm trying to look at your screen, but for some reason I can't see it. I'm clicking on you, but I can't see. Yeah, but it has a camera, but I don't see it. Yeah, I don't see anything. Yeah, I don't see your camera. Yeah, I don't think so. I don't I don't see it. I do not see it. Let's see. It, let's see. This is on demand. Yeah, on demand is working. So let's see. But yeah, I can't see your screen. It does have a camera, uh, uh, but I cannot see the. I mean, you could probably post it on the group. could take a screenshot of it. Oh, hold on. It says camera number 6. Yeah, I think everybody's already going to sleep. Ready to go to sleep. I'm ready to go to sleep. Yep. Gotta. Okay. So I this is one that I built. Um no, this is the red, white, and green. Um so this thing, like, if you pay attention, it moves to that. No, on top, on the graph, on the chart. Oh, I was trying to show you that it was moving. There you go. I think it's should be able to see it. When price moves, just pay attention to the lines. If you could see it, you could see it over here move. If you pay attention to the price over here on the right hand side, you can see it moving. Candlestick too small. I guess. Well, I'm watching it on a 55-inch TV, so I guess it's a little bit different on your mobile phone. Oh yeah, so it's gonna be hard for you to see it, definitely. Yeah, so I guess that's yeah, it's gonna be a little bit hard to see most of these indicators on a mobile phone. Yes. So now the green line is what we call your target one, and the bottom green line is your target two, and then you got resistance one and resistance two, and then this is your average price. Your basically your VWAP or whatever you want to call it. Well, hold on. Yes, that's a 1 minute chart, and it probably will not. It probably won't even hit it. I don't even know what time this chart is on. I don't even know what time that is. It's almost close, I think. Yeah, 13:55. 55. Oh, it's still 1 o'clock. According no, 15:57. So market's about to close according to the time frame. So I might probably the target might not even hit on either one of them. But it's just something that um kind of been working on in the past. You like everything I do. she, she says she yeah I don't think oh why do I use it? I do use it. How do you think when all my charts have these here? If you look at my charts that I share with Anna, of these here are there. If we look at them, um, if I go and see, she's like just leave it on Discord and just watch it. My wife be like, "What are you doing? Why is your computer on? That's wasting electricity." My Oh, she already asked. She's like, yes, she al- she al- she already asked. Um, all right, so let's see. I think this is the one. All right, so this is Tesla. See that white line there, and the green line there, and then the red line. You guys probably can't see because it's probably too small. But you see here, the green line, it got touched. Here you see this is another study too. I see all the green candles and then red candles. I see target two or resistance two is up here by this one over here, almost to the dollar. Um, this is resistance one. Once it broke that, you know, this is the average price. It got rejected in that, and then came back to target one down there at the bottom. If you short it down here, if you short it at resistance, well, you short at resistance one, well, then your first target would have been this white line, and then the first green line would have been your second target. Right. But that's how you're supposed to do it. You're supposed to take if you take more than one, you're supposed to exit half and then let the other one run. I think Betsy left. Yeah, I think so. I think her name is I think her name's User. Oh, she's back now. Yeah, well, market closed. That's 4 o'clock already there. Well, it's moving, I guess, but that's 4 o'clock already. Well, here you would have should have exited already. Like if you shorted here, you would have exited over here. There's no reason for you to stay on that trade because see it's moving back up to your initial. If you shorted over here, it's moving back up to that line here, which is support. But we could, but even on the look at this one over. This is the ES. See that line there? If you would have gone above that line, and you still would have probably got stopped out if your stop loss was too short, and then your target one would have been here and would have let the other one run. Let's see where the other target is. Yeah, the other target is way up there on top. It's this one here. But I'm saying that's a reason why the Woody's indicator is a little bit more accurate. I think this is this one. Woody's indicator. Yeah. Woody indicator. Yep. So this one would have been more accurate on the levels. See that the Woody indicators are these here. See that? Uh, resistance there, and support here. So you know what I'm saying? Um, so the Woody's indicator is kind of a little bit more accurate. Mine is not quite there yet, but mine I use for swing, so I could care less on day trading right now. You know what I'm saying? But the Woody's I've used it for day trading. So if you guys want an indicator for pivots, the Woody pivot indicators more a little bit accurate than anything else that I've tried. Are you okay? Are you sure? Cause next month, I'm gonna have another one, and I'll be like, "Hey, are you okay?" Or on Monday, you're gonna send me a message, just Louis. How do you do? How do you do this? I was like, and I'm thinking to myself, I had a webinar for 3 hours now, and she forgot to ask me questions, and now she wants to ask me on Facebook. Tell her to watch the video. It's like, Irene, go watch the video. It's like, fast forward to the things that you didn't understand. Fast forward. Watch the 2.5 hour video long. Go watch the 4 hour video long. She says she hasn't. So what's the point of me recording them and then uploading them, taking time to upload them, and then y'all ain't watching them? All right. Well, I'm gonna get out here. Upload. It took me weeks to upload the other one, so I was just I was just yeah, it's uploaded now on YouTube, but it's 2 hours long, and I'm pretty sure people hate 2 hour long videos. So I know I do. I don't watch 2 hours videos. If it's not a webinar, I'm not watching it. All right, well, y'all, ladies, if you guys have any more questions, Facebook. Um, but write questions down. That way, whenever I do have these webinars, you guys, because typing is one thing, and then I think visualizing and seeing it on the screen, it's a little bit easier for me to explain than try to type it. I'm not a very good explaining it when I do type the message. Um, and I'm trying hard to kind of help you ladies how to build a strategy. Um, so you guys could be profitable. You know what I'm saying? If you guys want to, say I want to quit my job tomorrow, you guys could do that. You know what I'm saying? So, um, but it has, like I said, it has to come. You have to build it from the bottom, and it just work from that. Learning support resistance, learning a couple SMA lines or EMAs, whatever lines you guys prefer to use. Um, Learning how the crossovers work, and if you want to trade based on the crossovers, you trade based on that. If you want to learn how to trade based on the Kellner channel or the Bollinger Bands, you work on that next. And then you have the Keltner Bollinger Bands, and then you have your SMAs. And once you get a confirmation more than once, well, then you're more likely to be on the right track to being on the right side of the market instead of trying to guess uh, if is it gonna go up, is it gonna go down. You know what I'm saying? Um, and I think that's a problem with the majority of Anna's group. I think um, most of them are new. Some of them been training for a while, but I think Anna done took most of the experienced traders to her bot group. So I think most of her experienced traders are on the bot now. So um, she doesn't post a lot there no more. And then when she does post, it's basically her spreads now, or oh, this is what we called on the bot, um, which nobody cares what you called in the morning. You know what I'm saying? Um, so what? Yeah, nobody cares in the morning. You post that in the afternoon. So I try to help you like options. I've been posting the scan, what I find on the scan, and then I'm say hey go through them, see what you find. I've taken a few trades off of that scan. Um, so and then I do post charts. You know, I'm not on there posting charts. 24 hours, 7 days a week, but I do post where kind of where the price I think is gonna go and what I look for and stuff. And you know, she's neutral on the market. I'm not. I'm bullish. I still got December contracts that I'm up tremendously. So since I bought them at 10,900 and some change. So and then I have some June contracts on there too. So I don't need a day trade. Yes, Nasdaq future contracts. I'm swinging contracts um because I'm focusing on other strategies. So while my future contracts make me money, I'll focus on something else and then I'll cash out either expirate right before expiration or close amounts. No, 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 no. Regular, yeah, regular con. $17,900. Um, that's yes, you are correct. Um, so but you are required to have that capital to keep them overnight. So if you don't have that, you can't. They'll liquidate you and stuff. Um, TOS is my platform that I trade on. Uh, I do have an AMP account that I'm growing an account. I took $100. It's at $2,600 now. So I started with $100, and I've traded M and Q on that account just to show people that you could grow $100. You know what I'm saying? Um, no, I'm still doing one contract. Yep, I'm still doing one contract. Um, I could swing now since my requirement is over the required account to swing a micro. So I might do that. I'm waiting for a pullback. I should have bought it on Friday when we had that 200, the that 200 and something. Um, but we'll see. Like I said, it's a work in progress on that account. Um, it's a little bit challenging. Ah, on what? Yeah, well, that would have been the perfect buy dip. But then on an account that small, it's a little bit more risky. Um, because I still have to take care of the drawdown. You know what I'm saying? So from the chart, I think it's still creating a longer downtrend. Um, so even if I put a long on an M and Q, um, even if I try to short, I don't like shorting. I just don't like it. You know what I'm saying? I made most of my money long, so I stayed long biased because I'm able to kind of like time it almost perfect. Um, being long biased. Along you could always the RSI from what I've seen on the futures, it doesn't stay oversold for too long, but it can stay overbought for a longer period of time. Okay, so if you're shorting because the RSI is giving you an overbought signal, well, you're gonna be smack in the face. You know what I'm saying? Because it could stay there forever. You know what I'm saying? In other hand, when it's oversold area, it won't stay long for a long period of time there. It will eventually recover back up being long again. So okay, right. The the Feds are always gonna pump money in it. So it's not until the Feds stop putting money in the market, well, then is when the market's gonna drop. But the Feds are gonna continue putting money on it. So no, everybody's waiting for that crash, that crash, that crash, that crash. Well, like I said, if we get a new president, you guys want to short starting January until March. If if we get a new president, okay? If we get a new president. Now, if Trump stays in office, well, the markets are gonna continue higher. So, no, short in January when he takes office. No, when before then, like the markets are gonna continue higher. Like from here, November, it might be a little bit iffy. You know what I'm saying? December, we call it the Santa rally. You know what I'm saying? So guess what? Santa Claus is gonna pay these investors. You know what I'm saying? So they're gonna try to long this the market and then cash out in January. Okay. Because the contract expires at the end of December. You know what I'm saying? So, well, mid December or something like that, I believe. Um, yep. So they're gonna try to cash out then, and then Christmas Eve. Just keep an eye on Apple, Amazon, Facebook, and Microsoft. Those you don't have to look at any other stocks, just those four stocks, and it will tell you what the markets are gonna do. Okay. Um, those are kind of your main stocks to keep an eye. Like I said, I'm telling you, I'm putting 10,000 on calls on Apple, on Amazon, Christmas Eve. So, and I'm going like 300 points away from whatever price is on Christmas Eve. So let's say if Amazon low of the day is, let's say, 3,000 for Christmas Eve. Well, I'm gonna buy calls at the 33, 3,400 mark. You know what I'm saying? For January the 15th. So I might even do February, just depending on my mood. And I'm gonna tell you, Amazon every year, if you look at their chart, every year, let me get out of this on demand. But every well, I don't want you to blow your account either, so um no, she's gonna be like, let me wait, let me find out where Lewis lives. I'm gonna go get him. A lot of money, maybe. Oh, oh, you live in Singapore? Oh, okay, okay. So it's daytime over there right now, huh? The constellation. No, this is too much stuff here. All right, so this is October here, so we could expect a drop in October, at least at the end of the month of October. And then I think this is December. This is November here. Yep, November there. This is December here. Yeah, this is December. Let's see when is the 25th. Is the stars 12? What's this one? Okay, so here, this candle here is December. All right, so let me mark that. So this candle here is December, first week of December here, and this is January here. This is weeks, I think. No, this is days. Yep, this yep, this is days. Yeah. So this is the 20. No, this is the. I don't even can't even see the date on that. Yeah, that's the 24th. Now this chart here is. Oh, this is 2003. I'm like way out there, huh? This is like. No, this is not the. Yeah, but I went too far. It's like 20 2011. There's there's a I need to find that website. Somebody else shared it that you could put a stock, name of the stock, and then it gives you the every day for the past year what they how that day they performed. Let's see. Yeah, this is Chris. All right, this is Christmas Eve 2 years ago, 2018. Right here, this doji red candle here. Right here, this doji red candle here. I'll put a square box on that. All right, so that's Christmas Eve 2018. And look at what it did. I think it topped out. Let's see. This is the Yep, so this is January here. This is Christmas Eve. Look at this. So run. Okay, so that's 2018. So 2019. 2019. I'm almost there. 2019 Christmas Eve. Right? I think that's what it was right here. It's Thanksgiving. 26, 25, 24. Okay, so this is Christmas Eve here. But I don't know why they have a 25 there. Oh, I'm sorry, that's not Christmas Eve. That's 4. Clear. Alright, so that's a number 4. 18, 20, 24. Alright, so you found Christmas Eve last year, right here. That candle there. And New Year's Day. The number 2 candle is here. Yeah. There it goes. I think so. Let's see. From here to here, we got. Well, no, it's 109. 109, but Amazon. Even if you got 300 points on Amazon away, your option are still gonna get increase in value because the options are so expensive. Um, let's see. Let's pretend that Amazon it would have. This is basically we're just gonna pretend that this is Christmas. Today's Christmas Eve or whatever. And when Christmas Eve comes, you cannot buy January 1st. So you have to go January 15th. So it would be like 33 weeks out, 2 weeks out roughly. So 300 points would be way down there at the bottom. It's can't even see that 300 points on there. Let's see. So the price is at 31, so we have to go to 34. 34 strikes will be at the $19. You know, some I'm doing this the hard way. Let's go. I like Tastyworks better. All right, so let's pretend. Let's see. Today we need to go 15 days. 16. All right, so you go 300 points out. So that would have been 31, 34. So here, actually, you want to buy those, and then you could do 20 points. Hold on, I'm explaining this. All right. So $82 to get $82 for a spread of the 30 3390s and 3400s. For example, and this is just a prime example, this is how much options could be worth going 300 points out. Okay. So your max profit will be what it says down there at the bottom. Can't see that number in the bottom. $82. $918. Okay, that's your max profit. If it hits, hold on, if it hits 47, hold on, max profit is not gonna be there. Max profit is gonna be right here, I think. All right, yeah, that 43.60 would be the max profit. Okay, but we know that's not gonna hit 43. So let's be more realistic. Let's say if price were at the 33, so the price is over here. Let's say it gets up to 32 or some change. Let's say 33, and we bought the 34s or something like that. So your max profit on that will be. It doesn't. That can't be right. You're negative $81. That's not right. Let's a let's a spread. Yeah, you still have time. You still have some time decay. Okay, their platform is being glitchy because you shouldn't. Yeah, you shouldn't lose. Well, on top it says $44 at the 300, 3,000 strike if it goes. Then it says 3,200. You make roughly about between 115 to $202 on that spread. Now, the way I'm playing it, you know, I'll probably go, I think, farther out. I think I do like uh, 50 points or something like that. It probably costs me more money. Yeah, it costs $5, $5.55 to put this on, but my max profit is 4,445 if it gets in the call gets in the money. Okay, but we don't want to do um that. So if you, let's say you say, well, you're gonna take 5,000, 5,000. So shoot, why is it doing that? Quantity. It go sit down. Hold on. Something's. Oh, I haven't. That's why. Okay, okay, okay. So if you, let's say 5,000. Uh, okay, so okay, so this is your the chart here. So if you went with 5,000, you could make, even if it hits. This is basically an example. This is what kind of a 50-point spread on Amazon. If, let's say, for example, today's Christmas Eve, and we're expecting Amazon to open higher after New Year's. Okay, so I'm going 300 points from whatever price. I'm taking the current price of 31.25 and going roughly 300 points away. So the spread, the debit spread is worth, you're paying $5 and 55. So basically, you're uh, risking $555 um, per spread. Okay. Um, like Irene says, she's willing to risk 5,000. So I'm basically creating her a 5,000 spread, which is nine debit spreads. Her max profit is 39 6 39, yeah, 39 6, no, 39 9, $39,900 if the strikes get hit in the money. Well, if actually Amazon goes and hits like 4,400. um but as we know, uh Amazon probably will not jump 1,000. It did a jump 1,000 points this past um this past year, but you had to do a longer time frame on Amazon. See, it's over here on this side. In April, yeah, 2020. Oh, that was after the drop. Hold on. So yeah, it did drop. Let's see this year. So we got the high 2176 is the high before the drop in February. And on Christmas we got, so this is Christmas Eve on 19. So 17,895. Okay, so 1795 on Christmas Eve, and then it went up to 27.95 by February. Okay, so if you would have gone 1,000 points out, but bought instead of January, you buy February's, and you go 1,000 points out, you could potentially um, make a little bit more money because the strikes are gonna be worth less the farther out you go. Okay, but then you still have to hold that contract for however long. You could hold it right before expiration or whenever you hit your target. But it would sit, let's say we want to add some time to this. So let's say at time, where's the time here? Okay. Um, so it would be 4 weeks. So this is October 16, 23, 30. Okay, so these same strikes, and then we have to go, I said 1,000 points. So we have to go 4,000. Okay, so let's go look at the table. We had 50-point strikes, and this has a 70-point strike. So this is all right. So 33. It costs a little bit more money to go that farther out. Even going. Oh, hold on. Why is it? Oh, it is right. 33, 35. No, 1,000 points would have been 4,000. Okay, so all right. So we got 4,000. Let's pretend that this date over here is February. Okay, we're going February. Today's Christmas Eve or blah 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 blah. All right, so this spread is $7.05. Okay, 50 points. Uh, oh, 41. That's 100 points there. No, we wanted 50. All right, so 50-point strikes spread is $3.85. It's actually cheaper going 1,000 points out. Then you look at your curve, and the max on this same spread is still gonna be 33,000 on that. So you still gonna make roughly about the same on that, unless you go like it was suggesting 100 points spread out, and then your max profit on that would be 70,500 dollars. If it moves 1,000 points from Christmas Eve to expiration, 4,000. Well, even if it hits 4,000, your strike price is 4,000. So if it hits your strike at 4,000, you roughly make $33,000. Now to make the max of it, then it has to go to 5,000 and some change. You understand the logic behind all this, right? We're basically taking a previous chart and targeting that time frame. Okay, so Christmas Eve last year was 1,700. In February, it was 27. So 1,000 points in basically 2 months. Now keep in mind that if price increases, like let's say for example, it increases 100 points tomorrow. Well, that option is gonna skyrocket. Okay, it's gonna be worth more then than it is gonna be when expiration comes over, even if it does hit your target. You know what I'm saying? Because you have to keep in mind that the time decay that eats the premium off of the option. You know what I'm saying? So this is one thing that you guys have to ask yourself. Either I'll do a 1,000 point strike for February and hope that Amazon moves 500 points before February, and I'll get out on those 500 points on, let's say, half my options, and let a few of the other ones run. Then you kind of lock in some of that profit. You know what I'm saying? Instead of exiting out, instead of you buying 10 options and exiting out all those 10 options, my personal thing, if I had 10 options, I would exit out 7 and then leave 3 and leave 3 out. You know what I'm saying? Let 3 out. So you're already taking profit on 70% on your options. You're just risking 30% now. So that's about what I how I would play it out. Um, yes, right, right, right. But that's the plan for Amazon for this year. Last year I missed it. I kind of FOMO out it last year because I was listening to other people advice. They're like, oh no, Amazon is gonna drop to 1,000 or 1,500, and then the day after Christmas, that thing jumped like 300 points or something. I was like, what in the world? So well, was it 100 points? I think it was like 100 points. But still, the fact remains that last year's options was uh expired on Friday. You know what I'm saying? Because Christmas, I think Christmas was on Wednesday and Thursday. So you had Christmas, and then Christmas Day was Thursday, and then of course the 26th was open. You know what I'm saying? And then if you would have bought options that week for Amazon, then the day after Christmas you would have like banked. You know what I'm saying? Because same week's expiration, Amazon moved. You know what I'm saying? Same week expiration options are cheaper than farther out or whatever. So, but for the reason that I follow people, I was like, all right. After that, I stopped following a lot of people because I was like, no, I'm not doing this. You know what I'm saying? I'm doing my own thing, um, because I felt that I wasn't at the level to be knowledgeable on the market. You know what I'm saying? Or how to recharge. But now that I've dedicated myself to reading charts and analyzing, and now people asking advice from me, and then they're making money based on my analysis. You know what I'm saying? Hey, everybody's here. They're just mute. They're just muted. I guess they don't want to talk today. It to confuse you more again, right? well, right. Well, right now, Amazon. I think Amazon. You see, that's why a lot of people ask. It's like I've been already being asked. It's like, what do you think Amazon's gonna do? What do you think Amazon is gonna do? I was like, look, I don't know yet. I said, I wait. I'll wait till that time comes, and then I'll give you my analysis on it. But look at Amazon, even on this here. See, it buys, is that sell signal there, a sell signal here. Um, so I think it's gonna I think it's gonna revisit again that bottom here. What price is that? 2800, 2900 area. I think you'll revisit that again. You could play. I mean, if you want to trade Amazon, you could wait for this signal here and signal here. I would sell call credits because everybody. Well, actually, I would have sold call credit here. Um, but I would have sold the call credit like way out here somewhere. You know what I'm saying? Even if I collected a little bit of premium just to be on the safe side, that Amazon it was not gonna chew my butt off because I was being bearish. You know what I'm saying? So, but down here, you could have started adding put credits. Uh, down here, you put credit here, put credit here. You made money here. You could have closed it the next day. You know, obviously you had support here because it's over here on the bottom. See this green candle here. You had support over here. So this could clearly would have been a nice, either a nice call trade, like you got 8 days. Okay, so 1 week, you could have just bought a cheap call, because even if you go 500-600 points out, if Amazon runs, you're gonna make a little bit of money. You know what I'm saying? Because there's the table on the weeklies. I mean, it's on 5 points. See that? 5 points, 5 points, 5 points, 5 points, 5 points. So you're gonna make money even if you go way out here. You know. Well, these are, yeah. So even here, even this here, I think this is next week's expiration. I think. Yeah, this is no, these are expired already. Oh, am I look? Hold on, the 25th. Hold on, September 25th is already gone. 19, the 8th. Yeah, this is next week's. Yeah, I'm looking at it wrong. Well, also Tastyworks hasn't updated. I don't know why I don't even know why they have the 25th up here. They got 25th, the 2nd, then they got the 9. Oh, they got earnings coming up too. So they're gonna try to push it up next week probably. So even if you buy, let's say a cheap, let's say 34, or if you want to buy down here, this is let's see, Tastyworks give you, this is one deviation from the price, and this is two deviations down here at the bottom. So that's about this this blue line here is two deviations. Um, let's say you want to buy a call. Let's sell that. Oh shoot, let me clear the other order. All right, so we buy a call. Let me sell. So it's 15 cents for this one if we do it this way. Um, your max profit is basically $984, but we all know it probably might not hit that, so you might want to target like 3200 area. So you're looking at 100, let's say $100. Okay, you're looking at $100. for same week expiration. Okay, you're risking $15 to make $100 on this with this spread. But based on the chart, where's my chart? Based on the chart, it still has to get above that. I mean, it's at you know kind of a weird place there. So yeah, you have to wait for a green arrow. See, and right now it's on a bearish move. So, but anything can change on Monday. I think Monday's gonna be red. I think Tuesday's gonna be red. Wednesday might turn back around. Thursday might be iffy, and then Friday probably end up being green again. That's kind of my prediction on the market for next week. Done. I have yeah. Okay, so I'm guessing that's why he uses them. But I am getting out of here. I hope today's video is again 4 hours long. Okay. All right. Well, y'all have a good night. All right, no problem. Good night.